Hello and welcome into the KE Report. Shad and Corey here as your host, and today we're getting an update from Chris Temple, founder, publisher, and editor of The National Investor. And we'll put a link to The National Investor down below so you can follow along with Chris's work and writing. And Chris, always great to get you on the show. It's been a little while, but we've talked at nauseum with you for years, really, about the importance of critical minerals and when the government would get more involved. And we have seen gradual improvements over the last few years where there's been some shining lights. Recently, I think it was on March 20th, we just had the executive order from the Trump administration, and it was the immediate measures to increase American mineral production. And in this executive order, it's focused on critical minerals, even though they've lumped in gold and some other commodities in there, and strangely enough, didn't have copper in there. But we also have tariffs on copper. So there's all kinds of things going on in the critical minerals world. There's a lot of information. It's very dense in this executive order, but I guess just to kick things off, there's the permitting angle, there's the funding angle. Let's start with the permitting angle. Does this remove more red tape? Is this going to have an impact on U.S. mining stocks as a jurisdiction? Will it give U.S. mining stocks a premium because of maybe some of these perceived improvements in removing the red tape and expediting the mining process?
Well, Shad, I don't know if it's premature to talk about a potential premium, although that might come later on if the funding and other things get attended to. But look, I said way back when President-elect Trump named North Dakota Governor Doug Burgum to be not only his Interior Secretary, but a super czar over Interior, the Energy Department, the EPA, and gave him a seat on Trump's own National Security Council. And I said then, and I'll tell you again today, that from a pure permitting and policy standpoint, and from the attitude of the federal government's executive branch toward extractive industries, this is going to be the best policy tailwind of any of our lifetimes, is what we're going to see coming from the Trump administration. Not only because of the philosophy, ideology, whatever you want to call it, that all of these guys have to try and reinvigorate American manufacturing, reinvigorate American supply chains, and all the rest of this stuff. As recent years have gone by, we continue to lag way behind the rest of the world in most areas. We have the majority of the fossil fuels we need, but not all of it, particularly oil, from which we get 4.5 million barrels a day from you guys up in Canada that we need. Coal, we're in good shape. Natural gas, we're in good shape. Uranium is probably going to be the industry that's a homegrown one in the US that recovers the quickest and has got the best fundamentals. But beyond that, a lot of what hasn't been addressed, guys, is the fact that you can have the best permitting environment on the planet, but that does not change the fact, and I'll give you one example, that at about a 16,000 some odd dollar a ton global price, there's not a single development stage nickel project in either the US or Canada that's economic. And that's a part of the whole equation that's going to have to be addressed by both of our governments. And I have heard precious little about how that's going to be done because you can erect all the walls and tariffs and stuff that you want. But until you're ready to take the step, and I'll go back to, a US centric thing, and President Trump says, okay, we don't care if Indonesia can develop and China can refine nickel for $16,000 a ton and make money on it. We can't and we won't because our values are different. We want first world protections. We want first world environmental standards. We want to pay first world wages, et cetera, et cetera. And so we're going to come up with a framework whereby whether it's subsidies to mining companies, whether it's loan guarantees or whatever, we're going to operate under the assumption that for the life of a project, the price of nickel, we're going to change that one to a two, and it's going to be $26,000 a ton. And we're going to erect whatever structure we need to make that work for everybody along the food chain because we want to have our own pricing and our own values. That's what they need to do next. Nobody, for the most part, is talking about it with scant little exception. And look, guys, if they aren't ready to do that, and if Canada's not ready to do the same thing because you're in the same boat, then shut up, quit thumping your chest, and buy the cheap foreign imports.
Isn't that the thing, though, Chris, right? The government can say all they want about positivity, trying to say we'll permit this stuff, we'll move these projects along, but they either need to guarantee an end price or they also need to give out some cheaper capital for these companies to build these assets. Because as much as we keep hearing how positive this is for critical minerals, this is going on 2, 3, maybe years now around the world of government saying we want to support these projects, but not a whole lot happening and not a whole lot of money being freed up. I know this recent executive order says the government's going to play matchmaker with potential funding partners, but do you think that's actually going to happen?
It's comical. Let me give you an example. Recently, when I was at the Mines and Money conference back a month and a half ago down in Miami, they had a guy from the Energy Department that was there talking about what they've been doing. Of course, this is a guy, and most of these agencies, the top level people change with administrations, but a lot of the people that do the actual work, they stay there through sometimes multiple administrations. And so this guy was there and had some experience with, and I'll give you one project specifically, to make an over $2 billion loan guarantee for the Thacker Pass lithium project, which, among others, General Motors has also provided some funding for. And this has been on the table for, I think, 3 or 4 years. It was only recently that that loan got approved, and almost comically, a tragic comedy, frankly, it got approved at a point in time when nobody in the private sector with an ounce of sense would ever dream of putting a nickel into this thing because the lithium price has crashed. It's not coming back anytime real soon, certainly not in the US and for US purposes, because the EV industry and a lot of that thing is going to be plodding along for the foreseeable future here, number one. And number two, technology and what the economist Joseph Schumpeter creative destruction of capitalism has now gone by those types of projects to where now you have what's called DLE technology, direct lithium extraction. You've got some of the better spodumene, higher grade spodumene projects that are still viable. But aside from that, these strip mines and clay projects and all these kind of things, you got to be nuts to put money into them. So I didn't want to say anything when he was talking to the group, but afterwards, when we were, everybody's around cocktails in the evening, there were only a few people there. I asked him as tactfully as I could. I said, do you guys have any lender's remorse over now approving this thing when if this project came to you today, nobody, even a government official, would dream of putting money into this? And he kind of gave me a bureaucratic kind of answer, essentially a long-winded way of telling me probably not. So, government is not always a genius when economics never mattered as a first matter. It was all policy, and you're trying to make the economics fit. Well, that doesn't work. And it's not going to work when President Trump tries to do it. So, to finish answering, there will be some money available for certain projects. The Energy Department will continue to make money available. The Defense Department, through DPA grants and that kind of thing for strategic metals, will fund things in and outside of the United States. But by and large, it's going to be a pimple on a flea compared to the magnitude of the problem and funding needs ahead of us. And as far as playing matchmaker, sure, the government can try and be a helping hand, but it's like with President Trump's insistence that he's going to get energy companies in the U.S. to increase production dramatically. No one's going to do it on their own nickel at the present price for oil, period. No one's going to lose money just to help him keep a campaign promise. So a lot of the economics here is just not being addressed. It's being forgotten, and it's going to lead to a lot of disappointment.
Well, Chris, there are people in the sector that have these big capex projects that are getting pretty excited. The Franken stocks are back. When you think about some of the stocks that have been permitting hell and they've been in the penalty box, Northern Dynasty's Pebble project in Alaska, Trilogy Metals project, Rio Tinto's project, the Resolution mine in Arizona, they've all spiked up. And then there's even people talking about something we've discussed on the show with you before in Minnesota and the Duluth complex, the Iron Range there. You've got Polymet, and you've got Antofagasta that bought that Twin Metals project. All of these things are resurfacing with the hope that these kind of executive orders and this focus from this administration are going to approve these projects. But they all have huge capex builds, too, to the point you just made. So where's the money going to come from to build these projects? I'd love to get you to weigh in on the Franken stocks.
Good question. Look, as far as Trilogy and Northern Dynasty, those are still many years from production. One of the things that was admitted in Trump's executive order is that there are still existing administrative and legal frameworks that have to be complied with. Permitting reform from the executive branch or not, all of this stuff is going to be challenged at various times in court. You still have some layers of permitting. The best and realistic hope that we can have, Shad, is that in the 4 years that Trump has, God willing, he lives a good long life, notwithstanding he thinks he's going to run for third term, which is kind of comical, but we'll leave that discussion for a different time. All he can do realistically is just start this process. He's fighting a monster in the administrative state and bureaucracy and the litigious society that we have in the U.S. that's decades in the making. And it's not going to be nearly as easy as some think. I mean, look, I cover a number of companies, as you guys both know, that are in base metals. I don't have big exposures because I think that we've still got a lot of headwinds, particularly where the base metals are concerned. But even among some of the companies I cover, let alone others, right after Trump's executive order came out, the ink wasn't dry on it. And I'm seeing all these self-congratulatory and victorious tweets and press releases and stuff. Oh, goody, the battle's over. I hate to tell you, no, it's not. Guess what? You're still going to get lawsuits. I mean, there's a high-profile project in Idaho that's getting more permitting, but guess what? There's going to be lawsuits to stop that gold with the antimony kicker project from going into production. So there's a lot of false hopes that have been raised by this one executive order and some of the talk around it. I believe that we're going to be able to regain a lot of our own destiny in producing all of these key materials that we need. But except for the one-off stories that have got some individual dynamics, funding or not, I'm talking tungsten, titanium, antimony, a couple of different rare earth stories and so forth. When it comes to the base metals, the lithiums, the cobalts, even copper, it's not going to be as easy as a lot of people have made it out to be. And there needs to be some presence in the administration. And I've been trying to help along, push some people in Congress on this to think outside the box and understand that if, as the executive order says on its face, they're going to be dependent on whatever they can get from appropriations, meaning the everyday federal budget to fund this, they're screwed before they start. Run up the white flag now. Because among other things, and not just because of this, the whole budget process is going to break down as the year goes on. Trump and the Republicans have already thrown away completely all of the work of Elon Musk, one of the reasons he's going to be leaving soon, I believe. They've thrown away any semblance of being serious on cutting the federal deficit because for all of the savings that have been identified, the House and the Senate Republicans, along with Trump, just refunded the government at last year's levels. So again, all hat and no cattle, all talk and no action. And that's going to make the whole budget process even more fraught than it was going to be already. And within that context, if this is what they're depending on, and that is what Trump's executive order depends on for at least some of the extra funding, there's not going to be anything of significance funded. And again, nowhere's near the, frankly, many trillions of dollars of need that's out there, not to mention a subsidy and pricing and similar framework to make copper and nickel and lithium projects in the U.S. work for the U.S. and insulate them from these undercutting global prices.
Yeah, it's a thing. It comes down to dollars and cents. One other thing that I've been hearing too is that as much as they can speed up permitting on the federal level, there are other types of permits too that the companies still need to do the work to get those sort of distinctions and those permits, and those don't necessarily speed up. It might just actually more pass the buck to some of these other agencies. Who knows? Again, question marks all over the place there, Chris, but what about the more advanced projects? I'm curious your thoughts.
Corey, look, as I said, I think that certainly on the federal level and with what the federal government and the executive branch has the ability to do in itself, there will definitely be some improvements. I'm not questioning that part of things at all. There will be some improvements. There will be less of an instance of duplicative permitting where you got to go do the same thing. Hey, Shad mentioned Polymed a little while ago, which of course is no longer exists. They finally were taken over entirely by Glencore, and now you got Glencore and Tech that are joint venturing that NorthMet project. But look, even with that situation, you've had multiple lawsuits over literally 25 years since yours truly first set foot there, still not being developed, still not, even if everything went right today, you're talking about construction and no production for 3 or 4 years. And sometimes the same lawsuit coming up again, a couple, 3, 4 years. And, that stuff will be improved on the federal level, no question. But you've got state permits in some cases. You've got, Army Corps of Engineers. That's kind of almost a sidebar to the whole thing where water and other things are concerned in some contexts. This is going to take a long, long, long time to fix. And it's just like all the talk about the deficit. It's just like all the talk about a sovereign wealth fund and paying down the national debt. When all it is talk and you don't have the action behind it, it's going to end in disappointment. And it's going to cost politically, if actions don't follow this, it's going to cost Trump and Republicans dearly. And I'm not wishing that, I'm just saying it.
Chris, is there opportunity though in those projects that are more advanced? Not so much early stage, but the ones that are more advanced, if the government really wants to show some sort of face here, maybe those ones are the better investment opportunities?
There are some, the ones that aren't the size of a resolution. You got a couple other copper projects, smaller companies in Arizona that have got great resources, a lot of the permits in hand. I'd be looking at those. I'd be looking anew at northern Minnesota and even northern Michigan. Great copper project in Michigan I visited with recently. You've got some others where you've got some engineering challenges and whatnot. Out in Montana, there's a company on my list that has got on the surface a great project, but it's not going to be as easy to develop it. They're talking about a block cave and so forth. So, look, there's a lot of things I think are going to come. My whole thing, guys, is to try and, bring a reality check here and say that there's way more work that needs to be done. One of the things I've been pounding the table on, funding wise, is that I'm part of an effort called the Coalition for National Infrastructure Bank, which is a way to fund trillions of dollars worth of these needs apart from the federal budget. Frankly, it's a measure that's been in Congress for 3 sessions in a row, hasn't had a single Republican sponsor. Incredibly, they've all been Democrats. But we're trying to change that because when you look at it, it makes more sense from a business standpoint than anything that's been discussed to date. So I'm trying to get people to look at that seriously, including a couple of people I know 2 or 3 steps removed from the president, and see if it might make it to him. Because without something like that, and again, without the appropriate amount of funding, we're just not going to get done what needs to be done. And we're going to continue to be ever more dependent and vulnerable on imports of all kinds of things. And just slapping tariffs on what you don't like out of frustration, it sure as hell is no way to fix this.
Yeah, some great points, Chris. And unfortunately, without the money, it doesn't matter if you have the permits. And some of
Right.
these tariffs, like the ones on copper, are kind of counterproductive because even the domestic companies that have copper still often have to send concentrates overseas to Asia that then become subject to those same tariffs. So it really, unless you're doing cathode production, it's very difficult to get these projects built in the first place, and the tariffs aren't helping. But I want to bring up one other weird angle to this executive order, and that is it included gold in it, which is now critical mineral. I mean, I know Trump likes gold, but it's not usually considered a critical mineral. But a lot of the gold companies we've been talking with, Chris, have been jumping all over that, saying, hey, it's just going to expedite the process even more. Even if they only have a credit of gold, they're jumping on that maybe they can get critical minerals funding or permitting because they have a gold project that's now critical. I mean, gold has been doing great. I mean, we should at least note with you that you just had a killer first quarter, the highest quarterly close of all time, highest monthly close in March. But what do you make of gold companies latching on and now considering themselves critical mineral companies?
Well, I'd do it if I was the CEO of a gold company too, because the president wants to have a place for gold. Of course, it's probably a discussion for another day, but even though it's quieted down recently, there's still this idea out there percolating of verifying how much gold is in Fort Knox and or elsewhere in the U.S. reserves, because there's been talk, among other things, that the president wants to verify how many tons of gold we have, revalue it, securitize some of it and use that to fund government and or his sovereign wealth fund. That's something that we'll see later. He's got his plate full of other things right now. But at least where the gold companies are concerned, and silver is quickly joining as well, which is why the precious metals are, one of my three top commodity themes still going forward, the other two being old energy and uranium, is that, you sure as hell don't have the pricing problem and headaches economically wise with gold especially as you do with nickel. I mean, 3,100 plus for gold. There's a lot of stuff out there that wasn't economic all that long ago, and now companies are swimming in money. I know you guys interviewed in Integra. I mean, they took over that project. It used to be in Rye Patch, and God knows, I forget who else down in Nevada. Very low grade, kind of marginal at 16 or $1,800. Now at 3,100, it's a cash machine. So God bless the gold companies, and look, if the president's going to be of a mind to fund some of these kind of things, domestic gold and silver ones, there's a lot of companies I like.
I bet there are. A lot of these gold companies are talking antimony. You even brought that up too. Is that a consideration for you if you're looking at a stock, a gold stock, and all of a sudden they're saying, look at this antimony component? Does that interest you anymore?
It does somewhat, but still, you've got to look if you don't have all the permits in place yet, you don't have the thing under development with the green light ahead. I still want to caution people. I know that people have gotten excited over a couple of stories in a recent past where there are still some environmental vulnerabilities because the ability of NGOs and others to sue to stop these things or slow them down or challenge permits or whatnot, that hasn't gone away and it's probably not going to anytime soon. So yeah, all else being equal, if you've got antimony as a kicker, that's a great story. Another one of my favorite stories right now in the precious metal space has a huge silver resource down in the southwest US, but they have a barite kicker, not antimony. Barite's a critical mineral that we do not produce any of in the US, and it's a key lubricant for the petroleum industry, for drilling mud and so forth. So yeah, if you can add one of these other especially critical elements to the mix, all else being equal, yeah, that's got to move a company like that up your list of ones that you want to be really serious about.
Yeah, we've seen a lot of these niche specialty metals really getting some airtime and getting some price movement, not just antimony, not just barite, but you've seen movements in a lot of the base metals that have tungsten in the mix. There's those
Right.
tungsten stocks have been on a big rip. You've also seen germanium because of the China export bans have a big rip. So, and even rare earths are back in the spotlight again. I want to circle back though to a sector you brought up twice on this call already, and I think it's worth reviewing. And it's definitely part of this executive order on critical metals and critical minerals is uranium and domestic U.S. uranium production. There's about a handful, about a half dozen companies that are either producing or getting close to producing here in the U.S. And you're seeing a little bit of life in that sector, except for the uranium price has come down and it's crushed all the stocks. And so whether they're explorers in the Athabasca Basin or even some of these up and coming developers and producers, the sector has been under pressure. I think you remain a uranium bull, but I'd love to get your thoughts on the sector.
Well, that's an understatement, Chad. In fact, today, as we're recording this, right after we're done, I'm going to get ready to interview our mutual friend Scott Melby and get an update on the whole sector from him. We keep in regular touch. I interviewed him at the end of the Q4. This will be right after the end of Q1. And we were comparing notes the other day that the extent of the correction that started 15 or 16 months ago after what I call Act One of the renaissance for uranium and nuclear energy has gone on longer and been more protracted than I would have expected. Recently, it's been for a lot of stupid reasons. Well, Trump's going to make peace with Russia and they're going to take off the Russian ban on imports of Russian uranium. Even if that happened, we're seeing the development underneath the surface of things of Eastern uranium is going to stay in the East, and we still have to fend for ourselves in this part of the world. Kazakhstan has been suffering, their production has been faltering. China wants more uranium, Russia wants more uranium, so that's not going to happen. Then you had another hit to the sector when DeepSeek, the Chinese AI company, came out and apparently demonstrated that they can do more with AI while burning a lot less juice. And everybody said, oh my God, well, uranium's story was based on a lot more energy consumption for electricity for AI, and now it's not as big a deal. We'll sell on that reason too. Just been absolutely stupid. And I'll tell you again, and I said this when the uranium was $75, unlike 65 right now, but I'll say the same thing. It's $65 a pound right now. This sector in this story is every bit as bullish going forward as it was when uranium bottomed at 18 bucks a pound on a spot price. And this is a gift. If you aren't loaded up to the extent you want to be in your portfolio with uranium and nuclear energy plays, now's the time to be doing it. This is a gift.
Chris, taking a step back, one more big picture theme that we've talked about with a number of more or less, let's say, resource focused investors is a potential shift in the whole investing narrative here on the back of, yes, tariffs, but more just kind of this geopolitical shift that we're seeing where instead of these paper assets, instead of growth stocks, instead of tech, that investors might actually start shifting focus and commodities broadly, including commodities stocks, could start to see a much longer term bullish investment thesis. Really a big change from what we've seen over the last 10 to 20 years.
I agree with that, Corey. And I've been looking for that for a long time, as have a lot of our listeners, I'm sure. We've seen it in fits and starts in the last few years. When you go back to 2022, when the S&P 500 was down a little over 20%, the NASDAQ was down by a third. A lot of commodity stories were doing great. And it wasn't just, natural gas on account of the proxy war against Russia being started by Joe Biden. But it was a lot of other things, and yes, a lot of them got bubbly like nickel and lithium and some others. But there was starting to be an acceptance of these stories. Now it's more isolated to gold. I think that, again, uranium is woefully cheap right now. Fossil fuels maybe less so, but I think long term they're going to do well. But in that area, you've got to worry about if Trump and other policymakers overdo things in a bad way, we could still have a recession near term, and that will take some of the attractiveness away, all else being equal, from commodities, because everybody just a knee-jerk faction. They sell commodities if you're going into recession. But long term, there's no question that for a whole host of reasons, I think we are going to see hard assets and real assets take over some of the attention that the Mag 7, which is now the Lag 7 in recent days, and a lot of the more dopey valuations of tech and whatnot. There will be, I think, more of a reversion to the mean. So I completely agree. But here again, near term, Corey, you've got to be choosy on your stories. And again, I think that with the pricing challenges, still for base metals, the story with the best and most unique fundamentals or projects, or one that's just such a, if it's explored, it's got such an obscenely high grade, you can't ignore it, whatever, because things could still get worse before they get better.
Well, I think a lot of people listening are of the same mindset, Chris, that, there's some fits and starts in some of these, but overall, there could be a migration of more generalists into hard assets, into the commodities. Seeing these executive orders on the national stage and seeing things like a copper tariff in the first place is just putting the commodities on people's news feeds, and it's just getting more people thinking about it. And it's hard to ignore the rip higher in gold, which often
Right.
brings in more generalists. So I think we'll wrap it up there for the day, guys. But Chris, always great having you on the show. And for people listening in, if you want to get more information on what Chris is looking at, what he's writing about, the company he's talking about to his subscribers, definitely click on the link in the show notes. Takes you over to the National Investor where you can follow along with Chris's work. He's always got something crafty to say about these markets, and not to mention that, but he puts a little humor into it, which I always appreciate. Chris, always great having you on the show, and looking forward to our next conversation.
Take care, guys. Thanks.